Welcome to Topnotch Tuesdays with
Brenda Stewart,
Jaime Huddleston. So, we're so excited, listeners, that you're here today, and we have a very, very special guest, Drew McMurtre.
Yes.
He has been a longtime friend of mine and colleague, and Brenda too. Mm-hmm. Brenda, tell us how you know Drew.
I don't know, I've just always known him. I don't really know. I mean, I've just known him for a long time. He's always been a good lender, and I really don't know how I met.
Awesome.
I'm sure that I came to your office in downtown
Cooper, Texas.
Say it right.
Texas, Cooper.
Cooper.
That's the way my granddad always said it. So
Well, I say it wrong every time.
it's okay. It's okay.
Anyway, well, the way Drew and I know each other, I was working for a local bank back in 2004
Yes.
as a mortgage loan officer. And Drew came in one day and said, "Hey, Jaime, I know you're doing a lot of loans with the agents, and, you know, I'm really happy for you." He really wasn't. But anyway, we were both really young back then.
Yes, they were.
Really young.
20s.
20s. I didn't have kids back then.
I'm a lot smarter now, though.
Did you have kids?
No.
Okay, yeah, we were young. Anyway, and he goes, "But I will take all your bad credit loans.
Right.
All your bad credit, all the ones you can't get pushed through, give them to me." And I really liked him. I was like, you know what? He is a go-getter. He drove all the way over here to come talk to me.
That's right.
I mean, I was impressed. Like, I really was. And so I did. I gave you all my bad loans.
Yep.
And then later on, you asked me to come work for the company.
I wished you would have.
And I was like, no, because then I became a real estate agent, and I was just like, no, I'm done with lending. But
CMB didn't do FHA loans.
Right, we didn't do FHA, we didn't do any government.
That's right.
VA or USDA. Now, we do have a couple of local banks here in town, though, they do government
Now.
now. But back then, it was conventional.
Yes.
Only, Fannie Mae.
In-house.
In-house or conventional Fannie Mae fixed rate. That was it.
Yeah.
So,
and that was the blessing of being a broker. I can offer all loan programs.
That's right. And you are good at what you do. You are very good. And even back then, like, when you made those bad credit loans turn around and they got houses, I was like, wow, this guy's good.
He is.
And so now what, I guess it's 20-something years later, right? Yeah,
Yes.
20, at least 21. Here we are.
Yep.
So, anyways, we have a few questions for you because we want to educate our listeners about the lending process, because there's so many different, there's just so many different lending programs just for first-time home buyers, second-time home buyers, second home, not just second-time listing and buying another one, but second home, people that want a second home somewhere else, investors.
Yes.
There's just a plethora of lending programs. So anyway, I guess I'll just ask the first question. What happened with the Federal Reserve meeting, and how does that affect current interest rates? Because current interest rates is the hot topic now, right?
Yeah.
Yes. And it should be, right? Because
Right.
the way our real estate, our lending works, real estate in general, is that most people have to borrow money to buy a house, right? And most people don't have the cash to buy a home. So that's where the government has stepped in and supported companies like Fannie Mae and Freddie Mac and the VA and the FHA, Federal Housing, the USD. All these are government-backed programs and wouldn't exist if it wasn't for the government, because they want to push housing. Because obviously there's so many jobs that are tied to housing, home builders and people that do concrete work and people that do real estate. I mean, there's so many jobs that are tied to it. So, if they want to affect the economy, if they can funnel money towards things that create jobs, it's going to help, and real estate's one of the biggest ones they can do.
True.
But at the same time, they can affect jobs and the economy by raising rates, right?
Right.
And that's what they've decided to do. Apparently, we have, as Americans, are doing too well, and so
Isn't that sad?
And we need to bring that back a little bit. And so, how we're going to do that is we're going to raise interest rates to make it more difficult for people to borrow, make it to make it unaffordable for the vast majority of people to be able to afford a home. Oh my gosh, Brenda. We're going to have to stop and start over.
Just silence your phone. You can't take a call during this. It's fine. No, we're not. We're moving on.
Okay.
Brenda, you can't take a call during the podcast.
I'm going to
Okay.
put mine on silent too.
Well, it'll be okay. Does Missy need to call Tanner?
I don't know. Missy called
Can
Tanner.
you call Tanner and ask him if he's okay?
I know he's okay, but ask him if he needs something from me that I'm in a podcast, please. I'm sorry.
It's nothing to
I thought I
apologize
had
for.
it silenced. Am I
It's
going to
okay.
get fined?
You're a real estate agent. Your phone is always on you.
It
right?
We
is.
have to answer our phone. I just silence mine.
Well, I thought I had it. Okay.
The best thing ever is that
Brenda,
thing when
it's okay. Listen, Brenda's always on her phone. Okay, let's get real here, y'all. Let's just get real.
Hey, I have 23 listings. I have people to talk to.
Yes, I know, and she's amazing. But I'm in the truck with her one day, and her texts are just blowing up. And you know what I did? I was like, "Why do you have all these notifications on for group text? Because I need to know." And I said, "Not today." And so I started silencing all the group texts. I'm like, "These have nothing to do with your listings, and you don't need to hear them go off every second." She's like, "Don't do that to my phone." Well, I have her passcode. I said, "Oh yes, I did. I did." So, anyways, moving on, Drew.
I'm sorry. You can just delete all that.
No, don't
It's okay.
delete it. It's good. Leave
it's
it.
real life.
Leave it. This is real life right here at
Oh,
Topnotch
yeah, it
Realty.
is.
So raw.
Missy, is Tanner okay?
Yes, he's
Oh, our baby's okay.
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 The one thing I want to say is these are all my opinions, right? It doesn't mean
Right.
they're right or wrong. But the Federal Reserve has decided to keep rates stagnant. I mean, they're not going to raise them. So they met last week, and they realized that because of their aggressive policies of increasing rates so much over the last year or so, that they have accomplished what they hope to accomplish, which is a slowing of the economy. Jobs are being lost, less people are buying things, and corporations and commercial real estate are in a bind because now they are having to refinance their debts at higher amounts, and it's causing problems, and that's what they wanted.
So, like with the commercial real estate, I wanted to kind of explain that to people because there's no fixed commercial rate loans.
100% accurate.
So
Yes.
they're adjustable rate mortgages, which are fine.
Yes.
I don't want people to be scared of adjustable rate mortgages. They're not always a bad thing. 2008, all of
They were
us,
bad.
Yeah.
here we are.
They
Here we
were a
are.
bad
We lived
thing.
it. Those were bad back then. But it's not always a bad thing. But I just wanted to say that is why some of the commercial, because they have like, let's say, $20 million loan and it's adjusting,
And larger, yes.
they are not being able to afford that payment now.
Yeah, so typically, and this is changes, and it's not consistent, but typically a lot of commercial real estate is on 5-year ARMs or 7-year ARMs.
Right.
So that means a lot of people 5 years ago, 2019 or so, got a mortgage rate, a good one on a apartment building, a hotel, a high
Probably
rise.
at 3.5, 4?
I mean, I don't know. Well,
I mean, I'm just guessing because it was
Commercial-
during the
Commercial's higher,
pandemic.
commercial's higher, but let's call
Yeah.
it 5.5.
5.5, which
Right.
is cheap for commercial.
And so now that debt's coming due, and they have two choices: pay it off or refinance it.
Yep.
Right. And now that same rate's 9.5. How
That's
does that
a-
affect your cash flow if you're an apartment complex owner, right? Now some of them, not all people, but a good amount of the business does, right? And so and then also we also have the issue of the new work from home economy, they call it, right? So think about places like downtown Dallas. Who really wants to drive to downtown Dallas and work in one of those high rises anymore, right? And
No
a lot of those
No
are
one.
empty. Oh, and not completely empty, but they say there's 80 floors and 60 of them are full. That's revenue being lost.
Right.
And so, these things make a big difference. And if that company or that building has to file bankruptcy, then that's going to affect the people working there. Anyways, the point I'm saying is that the Federal Reserve has so much power with these interest rate decisions. And even though, despite Americans' best effort of continuing to buy and spend money like we have, it is starting to slow. So because of that, they decided, hey, what we've been working on is working. So they didn't raise rates. So they're going to hold it. And what we believe, and we could be wrong completely, but we believe that we're going to stay with these higher for longer is what they're calling it. They're just going to keep this higher rate for a longer period of time. We're thinking into next year sometime, maybe late next year. And then when they do start to lower rates, which they've told us they're going to, right?
Right. They're going
It's
to.
gonna
We all
be-
know that. We've all been through this cycle. We know
Right.
they're going to lower.
If you've been in the economy, or if you've been in business, or if you've been just alive for the last 20 years, you've seen this, right? It's the economy goes up and down. People make money on the up and they lose money on the down. And the same thing happens in real estate and everything else. So we're going to have a time, it's going to be rough, and then they'll start gradually lowering rates, and more than likely we'll have a boom time in 2025.
But do you really think, I mean, I don't ever think it'll go below 5 again.
Yeah, those are COVID rates, right? That
Yeah,
was
I just
because
don't.
of-
I mean, when
Oh,
I
I
was
don't know, because back in 2006, they had gotten down to what?
6, it was 6
Well,
and
maybe it was
8%.
2005. I did a whole article over this. I think they had got down to 4.5, 5.
Well, you keep in mind, it depends on the type of loan. FHA
Right.
is always going to be
Right.
lower than a conventional.
VA too.
Yeah, so yeah, you might have seen some dip into those amounts, and how many points did someone pay to get to buy a rate
Yes.
down too? So the point I'm making is there's a lot of different things. If we could get rates into the 5s, that's an area that everybody can pretty much afford that.
Yep, it's
Right,
affordability.
and because houses have gone up, right? Y'all know how much? What's the percentage
Yeah,
increase in
exactly.
houses in a Hawkins
Listen.
County or a Delta County in the last?
And as
3
an
years?
appraiser too, when I see that stuff, I'm like, what just happened?
But you
What
can't
just
have
happened?
high rates and high
Yes.
home prices. Something's got to give. And if you go on any podcast, any Facebook post, any Instagram, that's all you see. Price adjustment, price adjustment, price adjustment, price reduction, price reduction. In my opinion, if the rates are high, you have to have a lower price.
Wait, I'm
You
seeing a
can't-
new word though, not just price reduction.
Price
Price
improvement.
improvement.
Yes.
Price improvement
Improvement.
is the new agent word, and I giggle when I see it. I'm
know.
like, who came up with this word?
I know.
Price improvement.
Price-
The price was lowered, people.
I know.
They lowered it.
But the thing about it is that I think once sellers get on board, when I started real estate, the interest rate was 6 and 8%.
Yeah.
And we were selling houses like crazy
Yeah, of
in 4,
course.
5, 6, 7. It was,
It was good.
yeah. But to me, I hate it when people say, "Oh, the market is just so slow. Oh, it's slowed down." No, it hasn't. It's normal.
Typical. This is typical.
It is normal. In Delta County, we always had a 30, 60, 90, sometimes 120 turnaround rate for a
Right.
house to be on the market.
Yes.
It didn't sell in 1 hour and 45 minutes with 1,900 offers. that
And
were-
50,000 over asking price and 10,000 sales concessions. Y'all, listen, let's talk about that real quickly
Mm-hmm.
because that was a crazy time. Appraisals were crazy. I was about to lose my mind too on both sides. But what I want to say is don't be brainwashed into thinking, and I do mean that was typical. That was not typical. That was a crazy time.
No.
This is a typical market, what we are
It is.
in. It is,
And
straight up.
I want to say something about the arms too. It wasn't that the arm was bad, but not everybody had someone like him, or I mean, there were several in the market that knew what they were doing, but it was that buyers were not educated. They didn't know what an arm meant. They just knew they were gonna. They had no idea that in 2 years their
Interest rate was going to go up.
we
and that their
talking about
payment was going to go.
2008
Yeah,
time
their
period?
payment was going to go
Right.
from 700 to 1,400. People had no idea. They didn't have lenders like you to educate them and say, okay, this is what's going to happen when you do an ARM. You know, now it's very unlikely that that interest
Because
rate is going to go
people-
up.
right.
It's going to go down.
And I think people get so scared, Drew, about this too, because I'm like, typically people buy every 3 to 5 years. A lady called me yesterday,
That's a very
said,
good point.
this was my forever home. It's not forever anymore. And I said, that's the number one answer. I said,
Right.
because you either want to downsize, you're going to move by your grandkids, you got divorced, you got married, you had a baby. It is a constant thing. So when
life changes, right?
life changes,
Part of
and
life.
so you know your job takes you somewhere else you didn't know. Well, it's the plan. The thing is with an adjustable rate mortgage, and this is what I tell people: don't be scared about that. If you know that you're going to sell this house in 5 years, do the adjustable, and then you're out of it because you did a 5-year adjustable rate mortgage, okay? And then you're selling it and you're moving on. Be educated about what you're doing, okay? Now
And
I
what
know
your
some
options
people.
are.
Right, what your options are.
Yeah.
And I know some people do not know what the future holds. But if you are the person that does know, like, I know I'm going to be transferred because I'm in the military or whatever, you know, which they'll do a VA loan probably more than likely. But just something like that, you know that your job is constantly being transferred. Look at those different options with your lender. Anyways, Drew, yes. I just wanted to say that. I'm sorry, I didn't mean
While
to.
you quickly to discuss adjustable rate mortgages, at this time, our adjustable rate mortgages are not our best opportunity, and the reason why is because our fixed rates are so close to the same rate as an adjustable rate. That's right now because of the way the market is. And there's no reason for us to get into how the secondary market works and things like that. But the point, all that matters to your average consumer is what's the best deal for me right now. If I lay out a 5-year ARM for you and I say the interest rate is 6.5%, but I get you a 30-year fixed rate for 6.6. More than likely, let's go with the guarantee, right?
Yeah.
And you have options of maybe you're going to keep it as a rental property one day, which is a great opportunity. To me personally, I believe that real estate is the main way that your average person can become wealthy.
Yes,
And
absolutely.
one thing I personally did, and it's a blessing someone told me about it, is I never sold my first house. I still own my first house up until 2021. I bought it in 2007.
I wish I would've kept mine.
And so every house that I've owned since, I've either kept, or if I did sell, I reinvested that into more real estate. The point I'm making is that if you get a great low interest rate on a fixed rate, the next time you go to buy a house, let's just keep that house, right? If you can, if it works for you and your agent tells you you can make a good income on the rental, or reinvest that into something else. But I wanted to kind of segue into a question that I know you're going to ask me, which is about the rate buy down. And I think it goes good hand in hand because it's a lot of confusion when we discuss what's called an interest rate buy down with an adjustable rate mortgage. They're not even close to the same, right? So an interest rate buy down, which is very popular right now, and what sellers pay for this, and it has to be negotiated by your realtor. Luckily, Brenda and Jaime are excellent realtors and great at negotiating.
Thank
And would you
We
answer-
are.
Are sellers willing to negotiate right now
Yes.
compared to a
Yes.
couple years ago?
Oh,
Yes.
Okay, so if you can negotiate with the seller to potentially lower a sales price on a home by $6,000, that might make a difference in your mortgage payment by $20 or $25. But let's say instead of negotiating for them to lower the price, you negotiate for them to give you $6,000 towards closing costs, of which you can use however you want. And you come to a mortgage broker like myself and you say, okay, I've got a contract and the seller's going to be paying $6,000 of my closing costs. What we could offer you is what's called an interest rate buy down. And that's where we temporarily lower your rate for either a 1 year or a 2 year or a 3 year time period. And you're thinking, why would I just want to get a lower rate for 1 year or a lower rate for 2 years? Well, if we know that interest rates are going down in the next year or 2 years,
We
right?
do.
Then wouldn't we want to get a lower rate today, and so that you can make that payment more affordable, knowing that we're going to refinance you in the future,
Yes.
right?
Yes.
True.
Thank you.
I mean, you nailed that.
That's what I'm talking about.
That's what I'm talking
the
about.
truth.
Yeah, you
Good
did.
job.
Yeah, you did.
So that's the thing. So that's why a lot of people are doing it. And right now, a buy down would be like this. We take you say right now, just to give you an idea, the current FHA interest rate 6.5%, which is awesome.
That's
because it was
not
over
bad. I didn't know they lowered that. I'm like, wow, they're not 7.25%, 8.
It was
Yes.
7.35
Yes.
or something.
All right, so
last
I'm
time
going to
I
back
looked.
They
up.
went down.
Forgive
Yes,
me.
they did.
Because of the question you asked me in the beginning, the Federal Reserve held rates high. Here's what the mortgage industry does. As we build up to a rate decision, like last week, we raise rates because we don't know what decision they're going to make. And in the mortgage industry, we're not going to get caught off guard with them going, oh, we're going to take the rates up 0.5 point, or we're going to lower rates. We don't know what they're going to do.
I didn't know y'all did that.
So we what's called bake it in the cake. We raise rates all the way up to that decision. If interest rates go down, well, great, we're going to lower interest rates the next day. If interest rates stay the same, great, then we're going to lower rates back down to where they were before we started raising. And if interest rates go up, we've already made the good decision of
That's
making sure
awesome.
we're prepared because
Why didn't I know that? I had no idea.
the money men on Wall Street are not going to lose money ever.
Yeah, you're so right.
So they set it up.
Wow, that was a learning curve for me.
So the point I'm going back to is that because they held rates high, then we saw a huge drop in the average mortgage rate the following day and up into this week. And
I
so
see.
we're going to go back to my question about FHA interest rate being 6.5% right now. So if we do a 2-1 buy down, that basically means 2-1. So the 2 stands for 2% lower than the average interest rate for the first year.
So it'd be 4.5.
4.5%.
Oh my gosh!
How do you think that affects a mortgage payment? Right?
Yeah.
And then what happens after that 12 months is up, you're going to be the 1 for 2-1. The 1 part is that your rate will then be 1% below the starting rate of 6.5 for the next 12 months. So that means it'll be 5.5%. Okay? On the third year, it's going to go back to the original interest rate of 6.5%. The great thing is, anywhere during that time period, we can refinance into the current market.
if it goes down to 3 again, you can turn
Yes.
around and refinance, and you can refinance your 5.5 now for 3%.
But let's say interest rates stay up.
It's awesome.
Then you still get, and we get to that third year and you go to 6.5%, you're still either assuming that rates must be higher because we didn't refinance you, right? You get that decision. And it stays fixed for the remainder of the term.
I want to know what the program was that he was telling you about last week.
Well, go ahead, Drew. You explain
It goes along these lines, though. It's an FHA loan, correct?
Yes, it is, but it has nothing to do with the buy down.
Okay.
The buy down is going to be for our normal everyday consumer.
Well, then we'll come back to that question
Well, I have
later.
a question about the buy down.
Yep.
Okay, so let's just say that, because we all know with all these secondary mortgages, there's only so much money you can ask for, 3%,
Yeah.
4%, 5%, 6%,
Yes.
whatever, when you're asking for seller concessions. Okay, let's just say that the seller offers up $6,000 for a buy down.
Right.
But the buyer needs more to close.
Okay.
You still can't go over that 6%, right?
That's true, but it's important to know. Okay, I can only speak for me and Stonelake Mortgage. There's
Okay.
so many mortgage companies out
Right.
there. All right, so our fees, our cost, how we charge borrowers for a loan, at no point would a buy down plus all their closing costs go over 6%.
That's what I wanted to know.
I was going to
Okay.
say a $300,000 house would be $18,000 in
Right, and
concessions.
that's what I wanted to
So
know.
on
That's what I-
average, your buy down, the 2-1 buy down, like a 1-1 buy downs, we're only lowering your rate by 1% for 1 year. A 2-1 is, okay, so it's more expensive because it's 2 years. So that typically costs you about 2.5% of the house in general.
Okay.
So it still leaves 3.5% of a 6% seller
Yes.
concessions to cover closing costs, and 99% of the time we're gonna do that.
That's what I wanted to know.
So the buy down, is it with FHA, VA, conventional, and USDA?
Yep.
It's all of them?
Every one
It
of them.
doesn't matter?
Yeah, and I'm gonna say this briefly because I don't wanna get into the weeds on this.
Okay.
But a buy down is all we're doing is taking the difference between the interest rate, okay, like we said, their interest rate is 6.5%, and we're gonna buy it down to 4.5% for that year. Whatever that difference in your monthly payment is, we're just setting that aside into an escrow account.
Oh, I see.
And every month when you make a payment, we're gonna put in that part.
Oh.
So the cool part is
wow.
you never lose the money. So it makes sense. You should do a buy down on every loan no matter what because you don't lose the money.
Always.
And the seller's giving you the money, so that money goes into this account to pay down your monthly payment every month. And let's say we refinance after 10 months. Well, that money's still sitting there. You don't lose it. It just reduces from how much you owe in the house.
Oh my
So
goodness.
there's
It's
no
awesome. If you
cost to.
Wow.
I mean, it doesn't cost you extra to do it. It just makes sense on every single loan to do.
Listen, that was like a little golden nugget, and you need to like hit the back 10 to 20 seconds and watch that again, because if you're a buyer or a seller, you need to know that.
Mm-hmm.
That was amazing information.
I think and I try to tell that to most of my clients, and you wouldn't believe that anybody that was open to listening always says, yes, that sounds like a great deal.
See, we told you he knows his stuff.
He does.
We're not kidding.
He's been doing it for a couple of months.
I have. And I love it.
Okay, so we've already talked
you
about,
do.
will current interest rates hike again, in your opinion?
We
I
already
don't think
talked
so.
about
No, I don't. I don't either. I don't
I hope
feel
not.
it.
Good Lord.
You know.
Well, they wanted to slow down the economy, and they did it.
Well, it's just
Yeah, they
starting.
did. Yeah, they did.
Are y'all feeling it?
Yeah.
Right? I mean, because the cost of food has gone up.
40%. I did a calculation on it. 40%
What
cost
about
of food.
your insurance on your home, on your car?
My
What's going on?
insurance went up 40%.
Yes.
What's up with the 40? It's really odd that you
Yeah.
said this, because everything that I have personally went up 40%.
Okay, your taxes on your homes have all gone up, right? Because the
Mine
values have
actually
gone
went
up.
down.
Oh,
Mine actually went down. That
I
new
would-
tax thing went in, and it actually
Okay.
went down.
So that's a
the
good
new
thing to talk
tax
about.
thing.
Yeah, and
We haven't-
on your homestead, I don't.
Oh, yes, the
Yeah.
homestead thing.
They're voting
My
on
appraisal
today,
is the day, yes.
and I've got to go vote after this. But
Yeah, I'm doing
yes,
the same.
you,
My appraisal
Texas,
did not go down, but my rate went down.
right, because the homestead.
We have homestead
right.
over
well,
65. I'm not over 65 yet. My husband.
No,
but just letting y'all know.
No, she's not. She is young
I'm getting
and vibrant.
close.
So
no,
we're all voting
she is
for
young
it
and vibrant.
today.
But yes,
Yes.
but you need to vote. I hope you voted, because you're not going to see this till after voting time.
Yeah, sure.
I think I'm going to go live on Facebook about this, actually,
I'm
because it's
going right after
important.
this.
Yeah.
Count County, I'm voting. And so, but it's
I
only
did before
for
I
the
came.
school taxes, right?
No,
The ISD taxes.
Yeah, I think it is.
Taking
It's-
it to 100,000 because
Uh-huh.
it's the homestead. It is the homestead too.
I think that one was already voted in. Because mine went down
Oh,
this year.
yes, that one's
It's
already
the-
voted in. This
yeah.
is the school. You're
Yeah,
right. I'm
but
sorry.
It's going to, what I'm saying is it's going to lower everyone's taxes, but that doesn't mean the tax dollar amount value of your home hasn't gone up. All of ours
Right.
has, right? So,
Right.
and it's increased constantly. So the point I'm making is that everything in our lives has gone up and it's costing us more
Yep.
right now.
Preach,
and
brother.
so that was what the Federal Reserve is trying to ultimately solve, is by getting us to quit buying more as much, to quit, just to slow things down. And this is a process that will now, because now that they've done it, they'll let it sit for a while and we'll mellow in it for the next year until
Yep.
we all are like, please lower rates.
It's
you know.
such a game.
Yes, it
It's
is.
such a game.
It is.
And if we just know this, then you can play the game.
You can.
You can.
Now,
You
so-
got to be educated, and
So
that's
this
why
is
we're here.
so the next year will be an excellent time to buy real estate. Because let me ask y'all this question.
Ooh,
Y'all
2024 is
know
gonna be
this.
good.
How much will things change in real estate in Hobson, Delta County, all this general area that
Hunt,
y'all are in
Wood,
charge of,
Rains.
right? When interest rates
You know?
drop to 5%.
Well, and all the, just like Delta County, I mean, it's growing all the time. You know, we've got that new lumber yard coming in from
Oh, yeah.
Broken Bow. I mean, things
Oh,
are,
Hawkins
there's
County's
nowhere else,
growing.
there's nowhere else to go. You know, the Metroplex is overrun with
Let's
people.
talk
that don't
about
know.
overpriced.
Let's talk about Greenville and Commerce growing. Greenville is like, whoa! I mean, we're about to be meeting. You know, like it's crazy, and it.
Yep.
I never thought. I always said that's not going to happen in my time. Oh, it's
I
happening.
would never have thought it.
It's happening.
Every day I get calls because as a mortgage broker, I'm licensed in Texas and Arkansas, but Texas is our main business, right? So I do business from El Paso to Houston
Right.
to East Texas to to the Panhandle, and every single day I talk to people moving here or wanting to move here from other states, and unfortunately a lot of times because of interest rates or whatever the situation.
and no income tax and
When I talk to them, they say that they're
state tax. Sorry.
they say that I'm just going to wait. I'm going to wait for rates to go down. So can you imagine the boom that's going to happen when rates go down?
And
So that's why it's a good time
that
to buy
means
today.
it's going to be an appraisal refi boom too. I got to get.
Geared up for
Yes,
it.
I'm looking forward to that.
Well, I'm trying, but like I'm like doing this. I'm like, hold on, Jaime, hold on. So yes, no, it's going to be good, and I'm excited, and I know that there's going to be a lot of agents that are not here anymore because they couldn't make it through this time.
What's y'all's opinion on that?
We've seen it before. Our agents are good.
Yeah. y'all
We
have
know
to-
ours are good.
Okay.
But we all saw it in 2008. There were agents that didn't make it through. They didn't want to pay the MLS dues and everything that we have to pay because they didn't have any closings, or whatever the case may be.
Yep.
So
It feels like we go through this
we're about to be on that time.
clearing out every so often
Oh
in
yeah.
the real estate industry.
Right.
Yep.
You know,
We do.
It's who makes it. Who's
Strong survive.
The strong survive.
Yep.
The strong survive.
natural selection. There's nothing wrong with that.
Natural
Yeah.
selection.
Yeah.
Yeah, it is. You're right. Brenda, well, I'll go ahead. I wanted Drew, if you don't mind, I wanted him to go over the DSCR. This is for investors, and I think this is really important.
Yeah.
Investment property is a really huge deal right now for people. There's
Yes.
a lot of foreclosures going on because of what Brenda said. Taxes went up so much.
And insurance.
And insurance, and people are being foreclosed on. I'm seeing it in
It's all
appraisals.
escrowed into their payment. They don't understand that.
I'm
It's
seeing it on
escrowed
one of
in.
my
Mhm.
listings and stuff I told you about. Like it's happening. So there's a lot of investors out there that may not know about this, and I want them to know what this is and how it can benefit them.
Sure. Well, first thing I want to say is that in reality, anybody buying real estate's an investor, right?
Right.
Your first time
Yes.
home buyer buying a home is an
I love
investor.
that. Yeah.
Your second time home buyer, anybody, we're all investing because in reality, real estate is one of the blessings we have in America that continues to go up.
You're never
And-
going to make more money than with real estate.
Most people.
Most.
Right?
Okay, I
people
should
will
say
not.
most.
And the opportunity is there for the average person because the government backs it with different types of loan programs, like 100% financing, down payment assistance for people, right? And so we want people to buy during like we said a while ago, if you know how to play the game, you can win the game. Well, we all know that we're going to have a dip. It's going to be a downtime for the next year. So should everybody not buy in the next year? Your first-time home buyer to your investor to your everybody, right? This is the opportunity we're going to have before the next boom, before the next appreciation in price, before rates go down and we can refinance into it. So the DSCR is called Debt Service Coverage Ratio, and it was a very common loan program in commercial. Because in commercial, they're not really worried about Brenda's credit and how Brenda's going to pay things. They want to know, how is that apartment complex doing? Is it how's it rented out? What kind of income is it making per month? These type of things. More of a business way to underwrite a loan. And so they were like, why can't we do this on the residential side? Right? And residential is going to be anything under 4 units, right? So a 4-plex, a 3-plex, a duplex, or a single family home. And what the DSCR is we're going to go and we're going to have an appraiser, an excellent appraiser like Jaime, is going to determine not only the value of the home, but what will the home rent for per month.
The income approach.
That's right. So an income approach is where, and Jaime, will you explain the income approach? I would just be.
So when I do an income approach, I have to call landlords, landladies in that market area. It has to be in that market area. It can't be in a different, like I can't compare Delta County to Hopkins. If I'm doing Hopkins, I've got to be in Hopkins. So I have a list of people I know that have many rentals, and I have to ask them, what does this rent for? Generally, a lot of them are so good, they already have like an Excel spreadsheet ready to go that they can email me with all the addresses, how many bedrooms, because I have to know the bedroom count and the bath count. It's super important for rentals. And apartments is all of it's super important, especially if it's duplexes, quadplexes, it doesn't matter. So they give me bedroom count, bath count, this is what it rents for. Because a lot of rental income is per bedroom, which is so crazy. So I have to...
Commerce.
I have to decipher, and I do a lot in commerce, especially with those college kids and stuff, and that's how they do it.
Commerce.
And the parking spaces are a big deal too, like in commerce.
So if it's a 4-bedroom, is going to rent more than a 3-bedroom, right?
Exactly, and I have to adjust, for that bedroom or whatever, and then that's kind of the gist. I'm not going to get into all the calculations, but that's how I come up with the income approach for a lender.
So what she's saying in a nutshell is that what will it rent for? So for the DSCR program, you're going to buy a $300,000 house. You're going to put down 20%. Okay, so that's $60,000. So you're going to borrow $240,000. We're going to ask Jaime to go out and appraise the home to make sure it's going to meet value and to tell us what should this house rent for. This 4-bedroom, 2-bath home that's 2,500 square foot in Hopkins County. What should that rent for? James is going to come back with a price, and the DSCR, debt service coverage ratio, is going to determine, what's the mortgage payment with taxes and insurance. Compare that to what the rent should be, and if the rent will cover the mortgage payment with taxes and insurance, then we're good. We're happy because now we know that the rent will cover the mortgage, and we're going to lend you money based on that. So what does that mean? I'm not going to ask you for a pay stub. I'm not going to ask you for your tax return. I'm not going to ask you for anything. I'm just going to ask for proof that you have enough money to put down, and I'm going to ask an appraiser to verify that home will value for at least the mortgage payment.
What about credit score?
We do need good credit, right? Because, and I say good credit, that's really going to be anything over a 680.
Okay.
If we, not to say that we don't have programs for below that, but now we're going to get into much higher interest rates and things like that. And, and the right deal, maybe it's worth it. But you're going to have a minimum score of a 660.
Mm-hmm.
Okay, and this is perfect to me for self-employed people like ourselves.
Mm-hmm.
That, when we file our taxes, we have to write off so many business expenses.
Sure.
And, a typical mortgage for a self-employed person, we should get into that. Like, if you're a first-time home buyer and you're self-employed, please reach out to Drew, because he can guide you on, if you're self-employed and you're a first-time home buyer and you're like, well, I'm not going to be able to qualify because my income at the bottom line is not going to make it.
That's right.
Talk to your trusted lender, because you don't know. You don't know.
Doesn't the government, they set up self-employed people to have the opportunity to take as many write-offs as they can.
It's the American way.
It's the game that we play.
It's the game we
So
play.
unfortunately, because of the write-offs that we have, that also affects you getting government-backed loans.
Right.
Kind of weird, huh?
Yeah.
I know.
But there are some really great programs that we have for that. And the DSCR is more an investor one.
Right.
The great one we have for self-employed people, and this could be first-time home buyers or people that own houses before, I absolutely love it. There's 2 programs. One is where I'm going to ask you to provide me your bank statements. Now, as a self-employed person, more than likely you're depositing all your money into your bank account every month, right? And then from there you're paying debts. And what I'm going to do is I'm going to ask you for 12 months of bank statements. I'm going to add up all your deposits in your business. And I'm going to say, look, Jaime, you have deposited $200,000 in the last 12 months. And yes, you're going to have expenses, you're going to have write-offs, things of this nature. So I'm going to take half that dollar amount. I'm going to call that your income. So half of $200,000 is $100,000. I'm gonna say that is how much I'm gonna say you make per year, and I'm gonna underwrite your loan based on that. An even better program that I like more for real estate agents and people that are 1099, right? 1099 means that you are a subcontractor for so and so, right? You're a roofer and you are being paid, 1099 from the guy that owns the roofing company or the lady that owns the roofing company is paying, and you're getting
Real
paid
estate
at
agents are 1099.
Real estate agents are 1099.
Appraisers are 1099
A
for
lot of
lenders.
construction people are 1099. I mean, you just go back to a lot of things that are 1099. A lot of oil guys and
Oh
gals.
yeah.
Oh, yeah.
are
Oh
1099.
yeah.
So on a 1099, I can take your 1099 and I can multiply that, or I can take 80% of what your 1099 is and say that's your income.
Oh.
Really?
And I don't look at tax returns. I don't look at anything other than that 1099.
1099.
Well, I'll be danged.
That
I
And
did
is-
so
not know that.
that's a blessing for people that are 1099.
Mm-hmm.
I didn't know you could do that.
I didn't either.
Well, there's a lot of programs out there that you
Wow.
don't hear about every day because it doesn't fit everybody's situation, right? So I've talked too much for over.
No, you've been so awesome. Like
Yeah.
I'm like, wow,
Very
this is
informative.
awesome. I mean, people need to know this stuff. Like, really. We'll see you next time on
Topnotch
Tuesdays.